Hey everyone, it's Matt with EquiPredict.com. Thanks so much for checking this video out. In this video, we're going to be handing over to you a very effective, very relatively easy to implement, and very profitable stochastic RSI trading strategy using 2 time frames. And again, if you're enjoying some of the content we're providing, please do feel free to subscribe to the YouTube channel. You can use the button on the bottom right. If you're on a desktop, also head over to our website, EquiPredict.com. We have a lot of information over there for forecasting the market, and we do send out to our readers an occasional alert from the EquiPredict model. So it's EquiPredict.com. Up on the screen here, we're using a chart of Johnson & Johnson. We've got the 2 time frames that we're going to be using through these 4 screens is the weekly on the left and the daily on the right. And what we're going to be doing is we're starting in June of 2022. And what we have on the screen here on the weekly chart, quick note here is that the light blue line is the EquiPredict model. It just simply it's a forecasting model. It lets us know when to be looking for some bullish action in the stock, alerts us to when we should be on the hunt for some selling pressure, some bearish bias. And so we're not going to be focusing on the EquiPredict model. We're going to be using just the price action. We did leave the simple moving average of 18 periods up on the screen. We've gotten rid of the 190. We have a few videos, I believe, on that as well. And we have on the top screen, we have the stochastic RSI. Now the settings you're going to use on the weekly is going to be 13. And on the daily, we're going to use a setting of 32. I would suggest watching the entire video. We're going through a few of these different screens. The first screen we're going to go through is a going long setup. These do go in time sequential order. We're going to be going through a long setup, meaning buying to hold. The second screen we're going to review looking at a short setup. The third screen, another long setup, and the fourth screen is where we are today and what the model tells us, as well as the EquiPredict model tells us, as well as what the stochastic RSI is telling us. So with that, we'll hop right into it. So on the left, again, what we want to do is look for a downtrend. You want to identify a stock of your choice. We're using Johnson & Johnson just because it's been obeying not only the EquiPredict model, but also it's been a model equity for the stochastic RSI lately. I mean, there's just so many of these out there. You really, choose. Could you use this on day trading? I suppose you could. At EquiPredict, with myself and the guys I work with, we consider ourselves more swing and positional traders. So we're not going to be talking about day trading in this particular video, or intraday trading rather, I should say. We're going to be talking about more longer or intermediate time frame, weekly over and daily time frame trading. So what we want to do is identify when a stock begins to collapse. And what we can see here is the stochastic RSI on the weekly, after it sort of hit that topping pattern, I think it was May of 2022, stochastic RSI started to get oversold. All right, and you can see that here. It's below I think it's the 20 mark here. What we want to do is we want to be looking for it to cross over, but we don't want to wait that long. We want to head over to the daily as soon as we start to see this oversold condition in the stochastic RSI. Again, your setting is 13 for the weekly. So when we identify a stock that we want to go ahead and pick up to the long side, head over to the daily. And what you're going to see is this weekly pattern of collapse is this daily pattern. This daily pattern magnifies that, and so what you're looking at here on the daily chart is the downfall just on a more granular basis. And what you'll see is that this stochastic RSI remains in the oversold territory. Yeah, it bounces up and it starts to kind of touch the halfway to 50 mark a few times, during its fall over a 2-month period or so. However, what we want to do is look for a buy signal. Now, I think I want to emphasize for the folks who are maybe newer to trading is that a buy signal is not necessarily a trigger for entry. I think you should really internalize that, understand it, look up some videos on YouTube about the buy signal versus a buy trigger. Really, really critical, because a lot of folks, they'll see this, this setup right here and say, oh, it's oversold, I'll go ahead and buy. Or they might see it start to curl upward and say, okay, I'll go ahead and buy. You really want to wait for a trigger that suits you. It could be, an 18 starting to turn up. It could be a trend line break to the upside. Price action is king. It should be where you first look. go ahead and look at your indicators, and then your price action should be where you end up looking at the very tail end of your decision before you go ahead and make a decision. And so what we have here is, as the stochastic RSI is oversold in the daily, we're not yet at this weekly point yet where the stochastic eye crosses over. But what you're going to notice is that as the price has been falling, you can actually see here that it was at this particular point that the stochastic RSI definitively crossed the halfway mark on the daily. Now, that alone is the buy signal. You could potentially use a break to the downtrend line, maybe here, these particular bars here as your trigger for entry. Now, I know there's a lot of videos out there for the 1, 2, 3 kind of entry where this is your down slope, you wait for your upslope, so this is sort of your 1, this is your 2, and then a pullback is your 3. The problem with that strategy is that sometimes they don't come back. Yeah, that is the most profitable, obviously, once a stock is ready to go, if you hit that third, but sometimes they don't pull back and you miss that run. So, we're of the mindset of if it's a higher quality stock, go ahead, and this is not investment advice or trading advice necessarily, but a particular trading strategy that we advocate for is to go ahead and you take a position when all the conditions look right and the stock starts to turn up. Yeah, the market's sometimes will pull back. Make sure you have your stops far enough away so that the machines don't stop you out, and then off you go to the races. And what you'll see on the next screen is that it does obviously climb, but you had your indication right here because the stochastic RSI definitively crossed that halfway point on the daily charts. Even though the price was so suppressed down here, it told you that there was a lot of buying pressure coming in right here at this particular point in time. So you could have gone ahead and taken up a position there, rode out the pullback, because in this particular case there was one, had your stops farther away from the market, and then if I flip over to the next screen, you're going to see that price went ahead and did take off nicely to the upside. So this is the screen that we're going to talk about how to identify the short. It's very similar to how to identify your longs, just in reverse. So again, what you want to do is looking for your price rising. You want the stochastic RSI to be really in the oversold kind of position up here. Now what you're going to see is that I think just off the screen here, the price did come down and cross that 50 line. However, you're a little bit late to the party if you're trying to go short at that particular time. So once price is climbing and stochastic RSI becomes overbought, you want to head back over to your daily time frame. And you want to be looking for the stochastic RSI to break definitively below that halfway mark, okay? Because oftentimes it will do that after its rise, after it's climbed to its high. So here it really was. This was pretty definitive. Now you have two options, just like you do on the long side. You can go ahead and take a position here. All right, these will be machines and traders taking out stops. All right, so again, place your stop far enough away from the market so you don't get stopped out. That's up to you. You can use parabolic SAR settings, whatever it might be. That's beyond the scope of this particular video. Or you couldn't wait for that 1, 2, 3 pullback. So there you go. There's a 1, the 2, and then enter in here for your 3. It's totally up to you. But again, this was your definitive signal, letting you know that it's a definitive sell signal, letting you know that there's a lot of selling pressure coming in. You also had, if you drew a trend line up through here, it's not a very good one, but that also was a pretty definitive break. I'm sorry, these are not great trend lines. A pretty definitive break to the downside. So again, you can go ahead and enter here, and then it falls off. So we'll do one more long one and bring us up to speed on where we are today. Here again, you've got you got the price that fell to the downside. You had on the stochastic RSI, the weekly chart, you've got a nice oversold reading. Again, we want to catch it before it gets up here, because again, we're going to be late to the party. Now, if you can see, if you're late to the party on the weekly, you can get really kind of taken on the way down. So what we want to do is head before that bump, before that rise in price. We want to head as we see this consolidating, or excuse me, as we see this price falling. Maybe you have a PPO indicator that you're comfortable using, setting that rides along with that. I would suggest using as few indicators as possible: stochastic RSI, maybe PPO for momentum, or RSI, not RSI, but PPO or MACD, whatever you're comfortable with. Price came down here and started to consolidate. But as it did that, we want to be hopping over to the daily, and we want to be looking for that next buy signal to go to long. And here it was definitively on the daily before that rise in price all the way down here. You had a definitive break to the upside on the RSI, Stochastic RSI, letting you know this is a particular entry. Now, as you can see, there was no 1, 2, 3 here. And this is what I mean by sometimes it just doesn't happen. You have a break of that downtrend. You could enter in here. The price never pulled back, and off it went to the races. Okay. So I hope that makes sense. You want to be looking for a definitive break across that midline after your extended move to whichever side you're looking to play. And lastly, we're going to bring us up to speed on where we are today. Just behind my image there, we had the EquiPredict model let us know that there was going to be some bullishness stepping in a few weeks ago. We did take a position somewhere in this range right here. We've recently taken some profits. I believe it was last week around here. Really nothing to be too concerned about. If you actually look on the daily basis, if you look on the daily time frame, yeah, we're overbought, but there's nothing really that's indicating at this particular time that there's any kind of selling pressure coming in. I think you might see some consolidation where on the daily time frame, there's a period of consolidation with Johnson & Johnson, let the 18 period catch up to it, and then another leg to the upside, most likely until the fall. At least that's what the EquiPredict model is letting us know is a very likely scenario with Johnson & Johnson. So I hope that helps. I hope it makes sense. Feel free to watch the video again if you need to, or a couple clips off of it to understand how to use that Stochastic RSI effectively. And good luck and good trading.